slow burn and it's little by little. And then suddenly one day you look back and you say, we got a real thing going on here.
I'm Matt Cooper, and this is Bite Sides.
Well, good morning, everybody. My time and afternoon for our special guest this afternoon. This is a very special day for Ausfine Bite Sides podcast. This is our first ever remote interview, all the way across to the good old United States on the pretty close to the East Coast over there. Normally we have people in the studio with us. This time the person is calling in remotely, so this is the first time ever, and no pressure, John. But this better be freaking good, and you keep the energy up. Otherwise, this would be the first and last time. But our special guest today, all the way from Chicago town, Mr. Jon Spainhour from Ever.ag. John, welcome to the Ausfine Bite Sides podcast.
Thanks for having me, Matt. And let me just say, anytime you need me to travel to Australia to do this interview in person, you let me know, and I'll make it a top priority.
Well, perhaps we should have extended that invitation this time, John. But to be honest, looking out the window, I think it's more like Chicago, typical Chicago weather than it is what you would have in mind for Australian weather. It's cold and miserable and dark.
Hey, I just watched the movie Endless Summer last night and saw that it's always beautiful in Australia. So I'm loath to believe you.
Okay, we'll keep that delusion going. That is, I'd say, typically further north than where we are. But mate, great to have you on board. Thank you very much for jumping on. You are a very long-standing friend of Ausfine. We've known each other for a long time, and really helped us really understand the US dairy markets. We jump on calls often as we looked confused at you and we say, John, what the hell's going on over there? And then you try to explain the intricacies of the US dairy market. But before we kind of go too far down those rabbit holes, would you mind, mate, just give us a quick snapshot? I think, first of all, if you wouldn't mind just explaining very briefly, if that's possible, what hedging is in its broadest terms, and then perhaps run into your history and how you came to be dealing with dairy futures and dairy hedging, and the evolution of Ever.ag.
Sure. Well, I would just say from its most basic sense of things, if you want to say what is hedging, hedging is about de-risking, right? And kind of understanding what your risk is today and taking steps to de-risk that risk, if you will, that you understand for tomorrow. And the type of hedging that I use in my toolbox and have worked with Ausfine with over the years have been financial tools that are related to the dairy industry, right? We all know about financial tools related to the oil industry or the corn industry or any number of different commodities, but I've always focused on almost entirely for my career on dairy risk management or dairy hedging tools, and help companies like yourself again understand what their risk is and then build a strategy for how to de-risk that and then come into the market and try to execute those strategies via the futures options and or over the counter markets.
So that's interesting you say that, and we actually had your brethren, work colleagues on recently, from the old the Fresh Agenda gang, and we spoke about, I guess, the nature of dairy and whether it was a true commodity, so to speak. So you mentioned oil before, and during that conversation, we spoke about sugar and potentially iron ore and coffee and what we would consider to be true commodities, and what we discussed was whether dairy and was a true commodity in the sense that there is a lot of differences in where cheese comes from example, and different specifications, etc. So I'd say, just even as we get into your history, it's even the history of hedging and futures in the dairy world, regarding trying to take what is very common in commodity world and put it over the dairy world, which is a product that goes under a lot more processing than some of those other true commodities do, and potentially the reason why dairy's probably been a bit of a laggard in this area. Your thoughts? Completely, am I misguided, or is that accurate?
Well, I think maybe we can bring the two together in terms of my personal history in commodities and or dairy goes along a bit with the development of dairy as a commodity. Um, I can't quite remember all the years specifically in the timeline, but when I first came down to the Chicago Mercantile Exchange in 2001, dairy was a new fangled commodity, if you will. And we've all seen the old pictures and the videos of everyone screaming and yelling and these gigantic pits all around. And that's really where I started out, was in the cattle and hog pit. And then there was this little bitty pit over to the side, and there were like 10 guys standing in it, and they weren't screaming and yelling at each other. They were like almost looking for something to do. The exchange itself was almost giving, you had to have a membership to be on the trading floor. They were taking steps to say, look, we'll give you this membership almost for free. Just come trade dairy, right? And just we need people to come be involved in this pit.
Just before you go too much further, can I just ask a really quick question on what you've just said? And then, so the time when you're trading lean hogs and all that kind of stuff. Now, this is before my time. When I came to the industry, that was just transitioning to the screen calls. Now, my vision of the Chicago Mercantile Exchange is that seen on Trading Places with Eddie Murphy and Dan Aykroyd. Is that accurate? Is that the way it was?
There were times, right? Now I started out in the hogs and cattle, right? And those were pretty rambunctious and pretty wild, and they were big. But I was fortunate enough that I came into the market right in 2001. The S&P 500 futures pit was still everything was still open outcry everywhere, right? So I caught really, I don't want to say the tail end, but we were going in to maybe the death rattle of open outcry. And at that point in time, everything was open outcry. It was huge. That S&P pit was every bit of what you might have seen in a movie, or every bit of what you could have imagined. And so I came in as a 21-year-old kid, and my eyes were about that big. Um, and I still look back at that and say that was such a cool experience that I got to be part of. It's not an experience that I desire to be part of today in my life, but back then it was such a great thing, and I take it for granted. We have young kids in our office, right, and they've seen movies like you're talking about, and they never saw it, and they'll just say every once in a while, one of them will say, will you just tell me a story about what it was like down there? And it makes me feel like an old grandpa, like, tell me a story. But I was really lucky that I got to see that.
No, that's cool. Excellent. So I derailed where you were going with that. So you looked over the far dark corner, and there was the dairy team.
And there was the dairy pit, and they were begging people to come in, and you know, I was a young guy, and working in a company, I worked for Cargill. It was very well established. The hierarchy was very well established, and no one was leaving, right? And Cargill decided, hey, we see this pit over there that's got dairy in it. We don't know anything about dairy, but we saw one of our competitors got involved. They have a desk. We need to have a desk in there. And they asked who would be interested in joining, and I was the only one who raised my hand. And that I got to open the dairy desk at Cargill, and that Cargill had, it was really exciting. I got to become a member of the exchange. I was responsible for my own deck. There was only one problem. I didn't really understand anything about dairy. And luckily for me, most of the people didn't that I was trading around, they didn't either. They had a little people like Brian Rice and Pete Turk and Joe Schmidt and some other people that had been around. They had been around for a few years and had a little bit of a head start, but dairy was new, and it really goes down to why was it new? It's not like people just started drinking milk, right? But in America, at least, the government there were government programs prior, through most of history, of recent history at least, that they created a support price for dairy, right? And they did that and through a lot of different mechanisms. But what it ended up doing was creating a support price for dairy that many times was well above the cost of doing business at a dairy farm. And what that led to was, if I said to you, Matt, um, you can make as many widgets as you want, and I guarantee you a profit on every widget that you make. How many widgets would you make?
As many as I could.
As many as you could. And that was really what the dairy industry found itself in. And as a result, the price really didn't move ever. And so there wasn't a lot of need for risk management because the price was either up or down a little bit, but it just didn't really move short of a weather event, right? Or something that could just really, structurally knock things. But it generally wasn't an economic function. It was a weather, something, or a disease that killed cows. As time went on, the government started stepping away from those programs, and letting dairy be exposed to more free market forces. And every time they stepped down, it introduced a little bit more volatility into the market. And then people started saying, well, this is unfair. We didn't have any volatility and now we have volatility. This can't be good. And one of the solutions was, well, why don't you, instead of the government I don't want to say falsely, but artificially taking that volatility away, how about you go use these risk management tools that every other agricultural industry, or most agricultural industries, have learned to use to manage risk? And that was really the beginning of futures and options in the dairy industry.
Very, very interesting. And we'll kind of go back a little bit further and just continue that transition from when you started to now. But just a really quick point around the Australian dairy industry, and particularly and the Kiwi industry, in the sense that it's a similar story, where the government intervention and government regulation was diminished over time, and it equally caused a bunch of volatility, and we're still dealing with it today, to be honest, as the milk pool in Australia continues to fall. In New Zealand, it's pretty stable, but we still to this day haven't got to the point of having that hedging mechanism in the market, or a realistic opportunity for the players in the industry to mitigate their risk, which I think plays a part in why we are where we're at, which is a diminishing milk pool. So it's interesting, and potentially it's the US where there was already these markets available for those other commodities. And now that infrastructure was already there, so there was more a plug and play option, whereas we just didn't have that. Or the other alternative to that is we just didn't have the scale that you guys do in the US. So it's an interesting parallel, and to me something that we still need to explore down here is having that ability to mitigate risk.
Yeah. Well, one of the things I would say to that is that it didn't happen overnight. Um, you know, it's it's been a slow go and it's been a slow burn, and it's little by little, and then suddenly one day you look back and you say, we got a real thing going on here, right? And it used to be, you know, we would have to go to companies that we worked with and we would have to introduce the concept of risk management to them, right? And and start from the ground up and do education. And that generally, for a lot of companies, that meant that the executive team or the owner was the one that you were educating. And they didn't have anybody that understood what risk management was underneath them. And sometimes it could, the decisions that they made, even though it came from the bottom of their heart, it wasn't necessarily, um, I don't want to say it wasn't the best decision, but it wasn't the most educated decision, right? Sometimes it could be a little bit from the gut and the heart instead of the brain. And over time, you know, those people started saying, you know what, I need to hire somebody. And if we're going to do this, we're going to do this right. And I'm going to hire somebody and we're going to dedicate this to this. And before you knew it, you had people saying, geez, you came to us a few years ago and you had to convince us to do this. Now, I don't know what it would take for us to go on about our business without this. And that really took a long time and a lot of work. But that took dedication from brokers, not just myself and not just the companies that I work for, but from everybody, all the brokers in the industry. And it took a lot of dedication from the customers like yourselves and the clients saying, look, we got to sit down and understand this because if we don't, we're going to end up making a bad decision or we're not going to make any decision at all, which is a bad decision when it comes to risk management.
Well, it's funny you kind of say that because obviously, if you have the opportunity to mitigate your risk in in its basic form, that's a very attractive proposition. But then when you start talking about futures and hedging, then it becomes pretty scary very quickly. And honestly, I think from you guys going out in those early days, it also would have been some pushback to you, to you and your brethren about, well, you've got a vested interest in this as well, in rolling this out. So yes, you're talking about risk mitigation, but you're also you kind of could be seen to be singing from your own hymn book, so to speak, as we need liquidity to create the market essentially. So which is not necessarily true because you are honestly, yes, you get a benefit from participants in the market, but you are honestly providing that risk mitigant to the market participant. So I would imagine for you that you might have had a bunch of different conversations, particularly in those early days, with people who are some might have been embracing and some would have been pretty resistant. I would have thought.
I think people, always want to know what you're up to, right? And why are you doing this? And, we were service providers and everybody, like I came from Cargill, right? Everybody that I worked with came from places like Iowa Grain and just well established companies. We were all brokers in another life or in another industry, right? And we all looked in and said, boy, I see the opportunity to do what we're doing in cattle and hogs and soybeans and you name it, all the different parts of the world that people have come out of and said, I think we can do that in dairy. And then you always have people come in and say, well, why don't people do this in dairy? Why don't they treat dairy? If dairy sometimes acts just like crude oil, why don't people trade dairy like they trade crude oil and manage that risk? And I would say over the years, more and more people have gravitated, and companies have hired people internally to do that. And those people that they've hired have come out of different industries, right? But there was a bit of like, what are you guys here for? And it was like, geez, there's this big, wide open white space canvas to go to. And, we can talk about it later, but I would say one of the things that Cargill, and I say this, I started there, but if you were to say, what's a company that's been successful in the commodity space? I don't think there's been anybody that's been as good as Cargill, right? And I think we're all aware of who they are. And I was lucky that I, started out there, but that was, 23 years ago that I stopped working there. But some of the lessons that I learned there and some of the lessons that are just well documented um, in the history books is a concept called general merchandising, right? And general merchandising is the idea of saying if I've got a forward sale of cheese on, I go buy futures against it, and if I have inventory, I go sell futures against it, right? And Cargill wasn't in dairy; they were in grains, and through that type of very, very, I hate to use the word caveman trading, but simplistic general merchandising, they built themselves into this commodity behemoth that they are. And there's probably a lot of different ways they've done it. Don't get me wrong. They've done so many things right, and so many other companies have too. But if you really dial into their trading and say what's the secret, it's if I have inventory, I hedge it, and if I have a forward sale, I buy futures. I hedge that, right? And that allows me to go do all of the other things that I'm really good at. But I've got that basic risk taken down, and I would just say I think myself and a lot of people looked in at dairy and said, people aren't doing that in dairy. Let's let's go teach it, and that's what we've been doing.
Yeah, no, it's a great call, and I don't think the industry would be the scale that it is unless it truly provided that risk mitigant that we've been speaking about. Getting back to your own path, John. So you started with Cargill in the really crazy days of the open cry pit, and then where we first got to know you was across with the rice team, Brian and Pete. So why don't you just pick it up from there and give us the rest of the story as to how we sit here today, including the rice transition into Ever.ag.
Well, I'll tell you what. We all, to a certain degree, carve our own paths and go do what's right, and at the same point in time, luck plays a big role, right? And I can say from the bottom of my heart, I, through pure luck, was standing in the pit next to two guys who were just awesome, Brian Rice and Pete Turk. They took me under their wing and said, "Why don't you come work for us?" And I said, "Boy, I got a lot to learn." And they said, "We got a lot to learn together." But they were great leaders, and they both understood. Like I said, they both understood commodities in general. I don't know that neither one of us grew up on a dairy farm. None of us grew up in the, on a farm in general. But we each brought our own skills to the table. We went out and did a lot of development at the customer level. We met great people like you guys at Ausfine and this strange Australian guy named Chris who went and lived in somebody's basement in Idaho, and said, "How does this American cheese thing work?" Um, for a long time, I was convinced everybody in Australia was 6'6", and
That's true.
that's most of them are, I suppose.
Isn't that what you saw in Endless Summer? That was
Yes, exactly. Just gigantic, huge people. But we did that, and we were able to build, and like I said, slowly and surely, and we learned a lot along the way. Customers became more sophisticated, and we really evolved with it. And then finally, or not finally, but somewhere in there, the U.S. Um, we started to export product, right? And that's really where I think the Rice Dairy Ausfine connection came together. Chris came over, and was the first person I know, and I think Chris will say that he was the first person,
Chris will say it's your first, yeah.
right, to export American cheese en masse, right, and understand how the American dairy industry works, and then how to export it, and then most importantly, how do you use these crazy things called futures, right, to lock in a price. And then I feel like that was really what jump started the dairy industry here, and it brought a lot of price volatility, right? There were times when the cheese market might bump up to $1.60, but suddenly I think it was 2000. You'll have to excuse me, my as I get older, my dates get off. But in 2006 and then 2008, we had these big price movements, and there were a lot of reasons to it, but some of the biggest reasons were exports, right? And then the trading companies they were already here, but the trading companies started saying, hey, the U.S. is as a great source of, while the rest of the world was looking for product, the US was a great source of product. And if we're going to do it, how do we use these risk management tools? And then it really put the US market front and center. And I think a lot of people learned how to use, first of all, they learned how to export product from the US. And I think you guys were some of the first to the table on that, specifically cheese. I know people had been doing non fat for a long time and maybe whey, but on the cheese side, that was a new thing, right? And it's funny, this past April, we got our cheese export report, and you can just see over the years it gets bigger and bigger and bigger. And now it's just a massive amount of cheese that we're exporting. And that just wasn't the case. I remember talking to somebody back then, way back in the beginning, and saying, what if we export cheese? Wouldn't that make the price go up? And I remember the guy saying, we don't export cheese here in the US. Nobody wants our cheese. And look at us now.
Really valid point is actually one of the key questions I wanted to ask, and you've already covered it off really nicely. But going back to those days, and Chris tells the story better than I can, but just in brief, I think he was talking to the used deck people back in the day, and as you say, a lot of the exports out of the US was really, whey and non-fat, typically lactose. It had always been a big export, but the used deck rep basically said to Chris that if you can export one container of cheese, basically he'll fly out to wherever in the world and buy him some dinner or something along those lines. But indicating that it was almost impossible, an impossible thought that the rest of the world would be interested in US cheese. But here we are now, where, correct me if I'm wrong, but I think it's 15 to 17% of US milk solids now go to the export market. So what was a relatively small piece of the puzzle is now a ginormous piece of the puzzle when you look at it in volume terms. Obviously, 85% of the products remains in the US, but that 15% is a huge volume of product, right?
It's huge. It's huge. And again, I can't stress how sneaky it's grown, right? It was just a little bit at a time, and it was a commitment, and then you'd have these big years and then these small years. And then all of a sudden it's like, wow, I think we exported 100 million pounds in 1 month, right? And it's like, that's a lot of cheese
Yeah, yeah.
in 1 month, right? That's huge. And then it used to be just Mexico, right, that we exported to. And then all of a sudden it was South Korea, and Australia and Japan. And again, that didn't happen by accident. That happened by people being really dedicated to making that happen. And we'll jump to it in a minute, but I would just say, one of the reasons that really things, in my opinion, that jump started the ability to export was the U.S. dairy industry was willing to make the cheese that people wanted in the export markets. And if you go back to the beginning of our conversation here and saying the government intervention and the government support level, right? The government, one of the ways the government supported the price of cheese was to say any at a certain price level, if you want to sell, if it was below a certain price level, you could sell your cheese to the government at a minimum price level. But in order to, and that sounds easy, but in order to do that, that cheese had to be of a specific make. It had to have very specific specs to it, and it had to be packaged a certain way, right? And almost all of those things that it needed to be to sell to the US government was not what the world wanted, right? But if you were to ask a dairy manufacturer, why won't you make what the world wants? And they would say, because when the world doesn't want it anymore, I can't sell it to the government. But if I just make what the government wants, I can sell it to the domestic market. Every once in a while, the export market will take it. And when things go wrong, I can go hit the government with it. And the government pulling out of that really forced the hand of people to say, I got to go find another home for this. And then they started making the export grade, not just cheese, but they started making export grade butter, an export grade non-fat or skim, however, whatever you want to call it. But that was a structural change that feel like the government really forced the hand of.
It's a really great illustration of what happens when governments get involved in markets. is it? I mean, we won't go down into economics of a government run economy v a free market, but it illustrates it perfectly. Of when it,
Tell you real fast though, if you were to at the time when the government said they were doing that and making these changes, people were very much against it, right? You had some people that were for it, but there were a lot of people who just had entrenched interests and said, "I understand how the system works. This works well," and they had their heart was in the right place. Now, you if you took the industry and said we want to introduce these concepts, I bet you couldn't get anybody to sign up for it, right? But sometimes you have to go through all that just to get to the other side, and then people look back and say, "Man, that was crazy that we didn't do this a long time ago."
yeah. But I think once you start introducing, you take away the government support. Obviously, innovation flows, competition flows, and then as you kind of highlighted that, particularly the export markets become attractive, and the manufacturers, yeah, have to adapt to the way they make product for specifically for those export markets. So which opens up the rest of the world. How do you think? So what's your take? Just I guess extending on that point, your view. So of how the industry has adapted and whether it is still now fully adapted to a globally fronting industry like the US dairy industry now, or do you find that there are still participants in there that are still very domestically focused and not really that interested in the global trade?
I think we can always export more, right, and find those markets. Um, and there's always room for innovation, right? I'll take butter for example. We have the Europe is in the 360s a pound on butter. I don't think New Zealand is very far behind that, and the U.S. butter market right now is $2.50 a pound, right? And so there's an enormous price differential in there. And one of the reasons you can say that exists is to a large degree, we're still not always willing to make the product that the rest of the world wants, right? The rest of the world wants 82% unsalted butter. Here in the US, we generally make 80% salted. And it,
And sorry, is that still a legacy from the government regulations on butter?
it's a government legacy, but it's also a domestic taste preference, I suppose. So if for and people will say, look, if I go make 82% unsalted and the export market doesn't take it, I got to sell in the domestic market, and you know, not everybody wants that. You don't just turn that in to 80% salted butter, right? You have to find a special market, and eventually everything finds a home at a price, right? But I think that's really one of those deals where we're still stuck in that nether world right there, and people will say, if I'm going to make 82%, I bet I need to have um, a a dedication for 6 months from a really good customer, or because I don't want it's not going to be a spot basis, it's not going to be a 1 month basis, and it's not going to be from somebody I don't know who might not come and pick this stuff up, right? And I think that tends to slow us down. We eventually get the deal done. We find those people. The price goes to $1, more than $1 differential, and then all at once we kick a lot of big exports out the door, right? And our price starts going up. And I think that's exactly what we're doing right now in butter.
That's certainly what we're seeing, John. Yeah, for the first time in years, the world is coming to the US for butter at a time where there was a glut of butter available in the US. So the world adapted their taste profile, and that 80% salted butter tasted just fine when it was a couple of $1,000s a ton below the market, right? Well, what was there?
And people are also willing to make 82% unsalted, right? But you have to give them a pretty good guarantee that you're going to come buy this stuff, and I need a 6 month guarantee on my run, right? And you have to appreciate that.
Excellent, mate. We actually, believe it or not, we're coming towards the end of our chat. But before we sign off, I do have a couple more questions. The first one is, I guess, a statement, and then a statement, and then your take on that. Mine is that the US is the one major producing area that is growing milk, and continues to grow milk. There is some headwinds there that we know of. But as we know, as it's well documented here, Australia's going backwards, New Zealand's largely flat in their production, and Europe is under pressure as well. So the US is the one that's growing. The other one was China, mostly for the domestic production. That now there's reports that they are slowly starting to flatline on their milk, if not go backwards. Do you think, and this is my question for you, a long-winded question, John, do you think the US can continue to be that growth engine of milk into the future?
Yes. The short answer is yes, yes, and yes. But the caveat to that is if it's profitable, right? I think the U.S. dairy producer, I don't want to say more so than any other dairy producer in the world, but they're very attuned to am I making money or am I not, right? And not just am I making money today, but is there an opportunity for me to make money tomorrow? And on top of that, I think we have the space. We have to grow if we want to. We also have the resources in terms of feed to feed the cows. And, one of the things that we look at is that in Europe right now, something that's holding back at least part of Western Europe's milk production are environmental regulations. Now, you could say good, bad, or indifferent, but our environmental regulations don't look the same, right? And there are certain areas like California that do are a little bit more stringent. But if you want to go, if you've got the rhyme or reason to go build a farm in the middle of South Dakota or North Dakota, and you want to be there and you want to, the sky's the limit. Go, there are some regulations, of course, but go build, right? And then again, it's going to come back down to is there the incentive to grow, right? And I think if we were to exclude these export markets that we're talking about, we wouldn't necessarily have that incentive, right? Because the price wouldn't be enough to make a dairy producer want to grow. And at the same point in time, we do have these exports, and the world to a certain degree is paying the U.S. dairy producer to produce milk, and they respond really quickly. And again, it's not overnight. There's a lot of factors that go into growth, but I would say in general, the U.S. dairy producer is profitable right now. They do have the incentive to grow, and they've shown us in the past they will grow. I think, like all people right now, something that we're competing with is the beef industry, right? And a lot of these, I don't really understand the economics of it myself, but I think the beef industry is certainly stealing a lot of cows out of the U.S. dairy industry, one way or another, if you will, and it's kept our breeding herd, our heifer herd, a little bit smaller than it needs to be right now to really accelerate. In the absence of that, I would say these prices over the last year or so, we should have seen milk explode higher and milk production, if you will. And I think there was a little bit of the herd just isn't quite as big and able to grow quite as fast. But at the same point in time, we are seeing the herd grow, and we are seeing milk production grow. And funny enough, if you look at a map and say, of U.S. milk production, where is the herd growing? It would be in Texas, it would be in Kansas, right, and South Dakota. And you say, where are these new cheese plants going on in the US? Texas, Kansas, and South Dakota, right? If you build the processing capacity and incentivize these guys, they will grow the milk. And I think they can continue to do that. And as a result, I think the US can continue to benefit from the demand for dairy around the world. And we can continue to export to the world. And the world can see the U.S. a bit of as the the a milk basket in terms of where milk can actually grow.
Yeah, it's a good point, and I think the why the US is a standout because, well, again, probably with the exception of China, although they've got their own different pricing dynamics over there. But your point about is if the price is right, the answer is yes, milk can grow, and I don't think that's the case in other areas. So even if the Australian farmer is super profitable down here, I don't think that will translate into meaningful industry wide growth of milk. And I think that's the same in Europe. I think your point around the environmental regulations is largely a part of that, if not other economics of land costs and whatnot. And I think it's the same in New Zealand. I'm not as close to the South American industry, so I can only assume that's the case there as well. So I think that's where you guys are the outliers, and thankfully that is the case. Where sure, if the economics are right, milk will grow, which is a nice change for the rest from what the rest of the.
Matt, when I first got into the dairy industry and started going out to California, people would say the regulations here in California are so stringent and so tight. I'm leaving and I'm having my kids set up a farm somewhere else, and this is the end of California dairy. And here we are, all these years later, and even with all of those regulations, California, which is probably our most regulatory heavy state, has continued to grow. Not as fast as a lot of these guys were right. They set their kids' farms up in Texas or South Dakota or Kansas, right? But California has maintained, if not grown, and the places where they've set up are a little bit regulation light as compared to other states where they're more regulation heavy.
It's a great point, and again, another feather in the cap of the might of the US entrepreneurial spirit. If there's a market there, it will grow. But also, I think California's position on that west coast to be the biggest beneficiary of that export boom, it plays a big part in that as well, right?
It's pretty amazing. And on top of all of that, not only to be on the ocean, but to have two major ports, or more, really, but two of the biggest ports in the whole world and busiest, to be able to move that stuff and get it going west is pretty amazing.
John, we're actually coming to the conclusion here, and I thank you for your time. It's probably getting on a bit late over there in Chicago, but was there, before we leave, just really quickly, your crystal balling, was there anything major changes you can see on the horizon in the world of dairy that we haven't already spoken about?
You bet. Matt, I would just say you asked earlier, or you mentioned earlier, and also asked about the formation of our company. I would just say that Rice Dairy, somewhere along the line, 3 or 4 years ago, we joined forces with Blemlings and Associates, right? And we became Ever.ag, which is who we are today. During when we were just Rice Dairy, there was Blemling. I knew who Phil Plord and his Insights team were, right? And then obviously I knew who my team was. Coming together has just been awesome. And I really, it's just a benefit to not only myself, but I feel like to the customers as well, and really been able to integrate with them. But you also mentioned another company, Fresh Agenda. Steve Spencer and his team, they became part of the Ever.ag family a year and a half ago, and that has just been even better. I can't say enough good things about them, and the type of work that they do, which is so different than the type of work that I do. And so we've been able to really stretch our legs in there. But the reason I bring all that up is Steve and his team have done such an awesome job of looking at the international comparison of prices, and the even within that, the valorization of milk within each one of those regions. Something that I've really paid attention to, and Steve was in the last year and a half has really brought our attention to Europe, right? And the effect that European prices can have on the rest of the world, right? It's easy to say New Zealand is such a powerhouse in milk, but milk wise, it's it's okay. And then you say, well, the U.S., boy, they're really big, and you go, yeah, they're pretty big. And then you look at the European milk chart, and you go, oh my gosh, like we're all small compared to Europe. And Steve has done such an awesome job of saying, look at these European prices, and when Europe tightens up, it's going to tighten the balance sheet up across the whole world. And when Europe slackens up, it's going to do the opposite. And you know, we've really been able to identify a great correlation between European mozzarella prices and U.S. cheddar prices, right? And the window that opens up there, but also within that, European butter prices taking milk away from European cheese production, right? And so if you ask me, my crystal ball, or what do we take away from this? Right now, I'm going to stick to my guns and say, watch Europe, right? And there's just a lot of things going on in Europe, right? In the Ukraine, you've got the war taking place, but on that northern plain of Europe right now, you've got a little bit of dryness, you've got some heat in there, and these darn diseases that we've been dealing with and learning about here in the U.S. We had um, bird flu, and Europe this past year they had blue tongue disease, right? And I don't know that blue tongue disease has gone away, but I also don't know that it's come back this year. But things like that tightened up European milk supply, and it brought cheese prices and a lot of dairy prices higher last year. And I guess I look at it to say we're entering into the weather market potential in Europe and in the northern hemisphere altogether right now. But if Europe tightens up, keep your eye out, because that's something that can really lift the whole world, or vice versa. And so I have my eyes on that. And like I said, Steve and his team are doing such a good job of monitoring that European situation and also trying to get that word out to people about what's going on.
Fantastic advice there, John. To finish on, watch Europe. It's probably been the case forever in dairy world, and it's will probably remain the case for a long time. But mate, thank you very much for your time today. It's been really enlightening across a whole bunch of different areas. So thank you very much for joining us on the Ausfine Bite Sides podcast.
Yeah, you bet. I'm happy to be here anytime, Matt. And like I said, if you need me to come to Australia, I am up for it.